All right. I was asked by a viewer to recheck SPY. I got the SPX 500, SPX 500 USD on Oanda, which is an awesome, I love the look and the feel of Oanda. CFD, contract for difference. Oanda guys, don't do stocks, but they do CFDs on most world indices. I don't know why they don't have Canada in there. You got Forex, crazy amount of Forex pairs. You got bonds, Deutsch, the Bund, UK, the Gilt, Treasury notes, the whole shebang. You got metals, expressed in different currency. We're all used to xauusd spot gold in US dollars, but sometimes when I just look at it on the monthly candle chart, gold and Canadian dollars, look at that, man. We're close. We're closing in on this breakout line for all-time highs, So it's a different feel. The more you look, the more you see the strength, weaknesses. And it just makes a whole bunch more sense the more you have access to all this information, all these charts. Via TradingView, super fast to access all these charts. Oh, natural gas. Nice pullback. All right. I digress. Let's go back to indices, SPX. And this was a crazy month of October, guys. Here's my red line where I identify the previous high. What was the high here? 29.42. Yeah, and the next month, October, we did not manage to overcome that. So I use that as my high watermark. I like moving that. And after that, I count the number of months before make a new high. And what's healthy is you want to be doing higher highs regularly. If you don't, that means if you're not overcoming your previous highs, then you're most likely doing lower highs, and that is significant in a downtrend. So keep an eye on that. It's like your timer on your stopwatch. Tick, new high, and then you wait. 1, 2. Right here we had a high. 1, 2, 3, 4, 5, 6, 7. Took 8 months to make a new high. And now we're testing that breakdown line, guys. This breakdown line. So October went down. We had a few days, but you don't pull the trigger right away. Closed up above. Buyers came in. Next month, buyers came in, brought all this above the 12-month moving average. And as November month is dragging on, the sellers, man, they're just coming in. I didn't think they'd come in this fast again. I didn't think we'd retest that breakdown line that fast. But now I think we're on November 22nd. We're really, really, really closing in on another test of that breakdown line. Even today, I was having fun on the 1-minute chart. And even during the day this morning, we had this crazy wick below the 26.30. All this price action here below. That's why you have to wait for that monthly candle close, guys. This is noise. And after that, trying to go really, really close to that breakdown line. Remember, the more the price action below the 12-month moving average, the more it's going to start flat and then going down. And that the trend is not your friend anymore. You're going to have bounces off the 12-month moving average, and then more likely you're going to go and test that support again and then go down. So you're kind of trapped here. So until we have a close above 29.20, these are all-time highs, until the price action decides to bounce off here, go above the 12-month moving average, maybe zigzag here a little bit and go up, there is no stage 2 continuation in line, guys. Always imagine both scenarios, but right now we're closer to that full meltdown below 12-month moving average. Shouldn't be in the stock anymore. you shouldn't be in that instrument. Doesn't mean you want to short right away, but you're angling, you're preparing yourself for that eventuality, guys. I'm going to redo my measured move, and this using my classic chart trading framework. If we got to close below the 12-month moving average, I got my first target at a 23.40. Down here. And the next important support is going to be the zone here. We had a 4 or 5 month consolidation pattern here at the 2180. And after that, if you go through that, then you have important resistance turn support right here at 2100. So that could be the bottom right here. We could have a retrace all the way down here and then all the way here. My imagination, you see right here, I drew a little line here because that's where I'm expecting some support. And after that, eventually maybe price action sinking in, wick, buyers coming in because they say that's enough. And after that, sideways move. And that's the thing, guys. That's the thing. Sideways move. You can't play unless it's a crate. You're going to need all this. Going to be damage, swords, people getting trapped. There's people that bought here. They're going to become sellers as the price goes down. Whenever the price goes back up, they're going to want to sell. They become resistance. So let's say, imagine that I'm going to hit some support here, some support here. Before you're able to replay this as a stage 2, to be bullish on the SPX, you're going to have to wait for that 12-month average to flatten out. You're going to have to wait for at least a close above it. And if you have a close above it, that means you don't want to be short anymore. But you have to wait and you have to let the price action digest all these previous buyers now turn sellers. And that could take months and months. And after that, break above a monthly defined pattern, breakout line, and then you're back up into a stage 2, guys. And then after that, you could go challenge. It's a whole cycle repeats. Then after that, you're going to go challenge these previous support and outturn resistance. And if you're able to manage to go in that and pierce through, then you go above. If not, then you become a new stage 3, and then you go back down. And the cycle repeats itself over and over and over and over. All right, cool. Let's zoom in on the weekly. All my scribbles. Move all drawing tools. All right. I'm going to compare the SPX not to itself using the Mansfield indicator. I like if the baseline is SPX for all stocks and other instruments, but for the SPX, when you're measuring its performance, I think we have to go to gold. So after that, that's like the refuge value. That's when, if the SPX starts going down, you want to see, okay, is gold going up? Is gold giving me money? If you don't want to short the SPX, then if it's underperforming gold, then you want to get into gold. At least it's going to give you a better deal than sticking around in the SPX, guys. Did that make sense? Not sure. All right. See that red zone? It's trying to be below 30-week average. A declining. That means a red zone. That means you're below 30-week average. You're underperforming in right now gold expressed in US dollars. And it's declining. So that's the first time you get all these, that weight of evidence, all these clues. That has been, you haven't been in the red zone since 2016, right here, the zone here. We have our line in the sand on the monthly at the 2630 line. I have it right here. That's my monthly defined breakdown line. All the price action below here, you would have not shorted because you didn't have the weight of evidence yet. You have monthly defined breakdown line. You're below it on the weekly, but that could be just noise. You really want to have a close. You didn't get the close. You were still above a 30-week average or inclining 30-week average. You see, you don't have the red highlight here yet. So you didn't have all the clues, all the check marks to say, okay, I have an increased chance of this really going downwards, going into stage 4. At this stage right here, all it's telling you, I should not be in the stock anymore. I should be out. There's probably going to be some consolidation. My money is just going to stagnate. I won't get the crazy returns going up, 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 up. It's going to be volatile. I'm going to be in a high risk situation where I'm not going to get the best return for the time I'm in the stock. And even if it goes up, that doesn't mean it wasn't a wrong decision. You'd have to wait for another signal to continue play. So you get out here, and then all these weeks, 4 weeks, 8, 3 months, then eventually enter if ever you have a continuation breakout signal. And if it fails, well, that's all right. You have your risk and money magic particles. You have always, you could go to my early Secretwars episode where I go through the exit strategies using Stan Weinstein. 1, 2, or maybe this 1, 2, 3. Exit here, have your position, or on pullbacks that went back up, you would have moved your sell stop, investors way, traders way, to try to exit as soon as the trend is starting to fail, guys. So it failed. You're back in stage 3. Right now, you're at stage 3, but what's different than since these previous pullbacks below is now technically the price action has stayed close to 30-moving average. The Ichimoku cloud has started to thin out. The more you move sideways, that more the support is starting to thin out. And after that, the weight of evidence is pointing to not much support, guys. You're really close to falling off the cliff, guys. Look at that here. Look at that. A close below 2630 monthly. 1 more week to go. Full meltdown. You're below the Ichimoku cloud. All the clues are adding up. That is your last line of support. After that, I don't know how fast it's going to go down. Maybe if we're lucky, pull back and then go down and then maybe try to get a short here. Here you could have had an embryonic short, but you're still above the cloud. You don't have the total weight of evidence in your favor yet. The total weight is going to be when we have that monthly close. Then it's going to be easy. It's just the gravity of the fear. People are going to lose confidence in their bullish stance. And after that, I don't know. I think they use the word capitulation. After that, it could just really sink really, really fast going downwards. Let me check something here. I want to go check. Whoa, what is wrong? What? Okay, 2005, 2006. Okay, I want to go check 2007. 2007, 2008. So same thing here. 2008, you see all these closes here. In 2006, giving signs of weakness, but no, buyers came in. We're good for another go. Far away from the 12-month moving average, going back down, going away again. And that, crazy wick, big warning signs, price action going back up. But as long as the more time passes and then you're not escaping, you're not going away from the 12-month moving average, you're actually getting closer. You're actually slowing down its inclination. It's starting to get closer to be flat than increased inclination, slowing down of the trend. It all adds up. And after that, when the price action keeps moving sideways and you can't overcome previous highs, then you start getting closes below the 12-month moving average, trying to drag it downwards. And guys, in 2008, it did not take a long time for the SPX to really, really, really drop after. It didn't take a lot of time to drop after it broke down below that horizontal breakdown line, that 14. Pretty much, I'm sure people were checking the 1455 back in the days. Buyers came in, pulled back towards the 12-month moving average. It was a great place here to continuation short. Embryonic breakdown. After that, you had a even stronger 1404 was another support area. Return resistance, and now after that, when the price action came back here around at that 14 level, close to 12-month moving average, it would be a perfect time to sell into strength. And after that, down it went. Down it went. So you had some chances right here to add some more. So in 2008, you had a chance right here. When you broke down here, you could have entered half a position here, another position here, another here, and that's what you ride all the way down. And then you would sell, you would rebuy. Worst case, when you broke above the 12-month moving average. And if you zoomed on the weekly, you probably were able to exit a little faster, guys. 2008. Yeah, you would have closed right here. At the worst case, when the 30-week moving average, you closed above, you say, I'm out. Trendline violations. Didn't quite have it here. 1, 2. You need Stan Weinstein is 3 points. Break on the 4th. For him, that's when you exit. But there's the sell stops you would have moved here, pull back. Price action goes back down, move up here, pull back. Price action goes back down, move it here, and you would have exited here. Worst case, whatever sit first. So that's how you ride stage 2 down, and you could inverse a chart, and that's a stage 4 down, and same thing for stage 2s. It's rinse and repeat. Great system, Stan Weinstein. The hardest part is just a human aspect. Respecting it, not falling to the fear, emotions, and then start doubting. So that's it for me, man. SPX 500, very, very close. Keep an eye out for the November close. It could happen as fast as it did back in 2008. But remember, there's no fear of missing out. You always have opportunities to get back in. So just wait and get back in at the best risk to reward moments, guys. Okay. Thanks for listening. All right, guys. Don't forget to subscribe. Ciao.